this is this is Stellantis' biggest plant in the U.S. and it relies on its, like all of the Detroit automakers, it derives a lot of profits from pickup trucks.
They have got a low cost or low capital structure, and that's important. I think it's going to be a buying opportunity at this moment. So
all that and more. So let's get to it. Tesla stock is up over 2% in the pre-market. The sell-off over the past month has been incredible, down over 11%. The stock hasn't been this low since August 18th. As we approach the end of the year, is it possible that Tesla can get back to the 100% gains year to date? I'll take those odds.
Action against Stellantis where it hurts. What do we know?
Yeah, I mean, like you said, Matt, this is Stellantis' biggest plant in the U.S. and it relies on its, like all of the Detroit automakers, it derives a lot of profits from pickup trucks.
I sure hope there isn't anything that's coming around the corner that could damage those pickup truck sales. But what do I know? The 313 area code has bigger fish to fry. I mean, you can only control what you can control. And right now, Stellantis is probably going to be pretty eager to get a deal done.
And particularly this plant, which people call it Shaft here in Detroit, like Sterling Heights, Michigan, they make the new version. So this is the pickup truck. This is the biggest selling vehicle for Stellantis in the U.S. But they rely on three different places. The Shaft, and they have another plant in Warren, Michigan, and they also have a plant in Mexico that makes heavy duty. But their strategy is to do the newest trucks with all the nice bells and whistles. Those are the most pricey, the most profitable. Those are made at Shaft. So that is what UAW President Sean Fain is taking down right now. And he really did telegraph this last Friday when he gave an update, because he said, we're close. And my sources were all telling me last week that Stellantis and the UAW were in fact getting really close. That Stellantis was possibly the closest to getting a tentative agreement. But it's also true that this is a very important point. Stellantis has more temp workers than GM or Ford. It's about 12% of their workforce. And these are people that currently start out at $15.78 an hour. It's about a buck less than the same job at GM and Ford. So Stellantis has always, they've had a lot of temp workers, and so they've had that labor cost advantage over GM and Ford here in the U.S., and I think that the UAW wants to close that gap with all of them. They don't want temp workers being such a huge lever that companies can pull for cheap labor. I've done a lot of stories about how people feel like they're being overworked. They don't have as many rights. They don't get the same financial benefits as a full-time UAW member does. And this is another key difference between the UAW companies or UAW represented companies and non-union shops, Toyota, Honda, Volkswagen. Non-union companies tend to have more temp workers in their workforce. So the UAW is really, they want to get rid of abusive, they call it abuse. Okay, I'll just say reliance on temps to control your labor costs. They want to end that at the D3. And, they're also talking about going after non-union auto companies after this strike is settled. So everything they're doing here is not just about D3. It's about the UAW wants to set new labor standards for automotive manufacturing use that they are then going to try to bring to other car companies.
The UAW may be able to convince some of these other legacy automakers, Toyota, Hyundai, Honda, they may actually get some traction from these legacy automotive companies as they are. Trying to get Tesla, Rivian, or even Lucid, any of these EV startups really, is going to be a struggle. And it's all because of the potential evaluation as we switch from the ICE powertrain to the next. Taking advantage of the lucrative stock options offered at a discount by working at these companies, that's worth its weight in gold. At this stage of the game, workers are willing to forego that UAW rigmarole because you could see your hard work reflected in the stock price. UAW workers at Ford, Stellantis, GM, they're not crying out for stock options. They want labor relief. They want money right meow. At some point in time, these EV startups actually may have UAW influence. I just don't think it's anytime soon.
Just a quick market thought as I read the headline that the S&P 500, through the breaches that 200-day average Treasury yields obviously have been spiking. Your thoughts on the big picture of the market?
Yeah, I think there's a lot of uncertainty, and the big narrative right now is yields. We're trying to find that normalization and balance, and I think once we find that normalization and balance and we get into the biggest week of earnings, which is right now, and we start having tech earnings, we might see some normalization in yields and perhaps some stability in the overall market. But the big theme is earnings and yields.
Yeah, look, we have about a third of the S&P 500 reporting this week, including many of those magnificent 7 names to which you're referring. This could be such an exciting week.
It is a week.
I mean, it really would be an exciting week how this goes. In the meantime, a name like Tesla has had a tough go of it. You know, the last 3 months down about 20%. It was really jumping for a while, went up to almost 300. What are you thinking here?
So Tesla, I think, is certainly a very difficult one to trade. We've got to take into account Elon Musk and tweeting or Xing. But there is Cybertruck demand. They're a beneficiary of the Inflation Reduction Act. Additionally, they have EV credits, and we're getting towards the end of the year. And normally we think about items tax-wise. They have been focusing on getting more demand than they have been near-term profits. But as far as EV is concerned, and they're prioritizing really their pricing, and they've noticed some attention to detail to certain specific things, their data shows that the U.S. vehicle growth, they grew 23% year over year. Most competitors, even though that's down for them, it's still an increase, 23% year over year. So we need to have some repricing and some recalibrations. But from a competitive perspective, anyone else in the EV space just doesn't have the same type of management and cost-efficient structure, because that's what they were centered around. Whereas others are doing shift focus-wise, they have got a low cost or low capital structure, and that's important. I think it's going to be a buying opportunity at this moment. So
What? I know the sky's been falling over the past week or so, but understand this, that chart doesn't look terrible. 80% gains year to date, and with tech earnings fast approaching, you don't think that's going to lift the tide of the Tesla boat? Cybertruck delivery event at the end of November? Unless you believe the entire market is going to fall into a recession, and you believe that the bears will feast, you might want to stay away from everything entirely. But if you're like me, and at the end of this year is going to be the beginning of a bull market rally, I truly expect there to be fireworks to ring in the new year.
the trade that I structured with this one, different than the previous, is a cash secured put because of the volatility, but I would want to add it to my longer term portfolio for that reason.
And, you know, really, when you think about the cash flow, they talked about the business consistently generating cash flow. They plan to $9 billion in cap spending versus that $7 to $9 billion. So a lot of the analysts, Rick Ducat, seem very positive on Tesla for the long term, even though we've had some near-term hurdles. Your thoughts on what you're seeing?
Yeah, a bit of a contrast there then, because long-term outlook is strong, but the short-term outlook has been a little bit rougher here. We can see that we've been trending upward off those yearly lows for quite a while here, kind of forming a triangular type shape here with our longer trend line going across the lows, our shorter trend line going across the highs. And this kind of triangular shape is something traders are often on the lookout for because it suggests declining volatility, you know, this compression of price in an increasingly narrow range. You can get an energetic breakout when it does eventually push to either the upside or the downside beyond one of those two trend lines. In this case, it played out to the downside here. We had the earnings move, big move downward here, but we stopped near an important point on Friday, and we're bouncing around that point today. This green dashed line near 213, you can see that was a point where we bottomed out there, and also a point where we topped out back here. So that's the kind of thing you want to look for, these places where price stops frequently. It can be an important support or resistance level when you can find something like that. In this case, it's more supportive, and there's not a ton of support below that point either, but we'll get to that in a moment here. I wanted to focus on the RSI as well, because you can see it's kind of a similar triangular type shape. RSI, you can use trend lines similar to price. In this case, we once again did break to the downside. We're below that 50 midline very far now. We are in the oversold area here, so that's typically regarded as a sign of further weakness. Now, once again, juxtaposed with that, we are hanging on to some support here. So kind of a mixed picture there.
Now, This is pretty nerdy stuff, and to be honest, I'm not a technical analyst, but I do like to look at it, listen to it. But just looking at this chart and all the lines and points of interest, you could tell nobody knows what the Tesla's going to do. Absolutely none. This chart is ridiculous looking. Me personally, I do use some of these technicals like the RSI. I'm interested in knowing whether or not the stock is oversold, overbought. It helps me with knowing when to enter a trade. Again, your boy's not a technical analyst by any means, but I am a proficient gambler. And that's all this really is. I look at it from a lens like poker. All my chip shufflers, you're familiar with GTO. For those of you that aren't, poker is essentially a game of math, analytics, with a little bit of gumption swirled in. You got your gut feelings on some things. But typically, if you follow the analytics, you should average out more successes than you would losses. Now, GTO is probably a little bit easier to follow than this technical trend for the Tesla stock, which is another beast entirely compared to the game of poker. But that's how I like to look at it. I've done some study on RSIs, MACDs, using 50-day moving averages, 200-day moving averages to determine trends. These are all tools in my bag for when I ultimately decide to place a bet in the options market. At my level of understanding, none of this should be taken as gospel.
It'll be interesting to see if we can hang on heading into the close here. Now, as a trader, we have a question. Are we banking on mean reversion or trend continuation here now that we've had this earnings move? People have had a chance to digest it. If you're looking for trend continuation and further downside, look for potential support right around here. This volume profile point of control, this shaded area, this thick red line here, that's the area of heaviest trading during the past year. Oftentimes, these are used as support or resistance. In this case, it would be support. If we were to keep going to the upside, we've got our purple 250 two-day EMA near 231. Then we've got our old trend line, which is right on top of our yellow 21-day EMA near about 245. So a few levels there to watch.
You know, Rick Ducat, you asked the question that I go to bed at night. That's what I think about. Do I think about trend continuation or mean reversion? I love that. I love that, particularly because what we've seen in 4 days. This 4 days has been the worst 4 days for Tesla of the year. It's down over 17% in 4 trading days as of early this morning to levels that we've not seen since early June. So the question is, does it provide an opportunity, right? In which case you'd have the mean reversion. Or are you worried, right? And you have the trend continuation. Final quick thought here, Jessica.
Yeah, we're looking for the sellers to get out of this trade, have some demand overcome that supply, which it seems like it is with the support lines. And also a note that I failed to mention earlier, they are banking on full self-driving and that AI play post-vehicle production and sales that I think will also translate positively into earnings.
Look, Elon Musk says it's coming.
He did. He has been saying it's coming for a while.
I know he's been saying it, but right now you also have the U.S. Department of Justice seeking documents related to autopilot and full self-driving, but I feel like these are always the kinds of headlines we get.
In conclusion, the UAW decided to play one of the cards they had left and took direct aim at Stellantis' pickups. It would appear we've left the eye of the storm, folks. The consensus is you should be bullish on Tesla, but there is some opportunity abound in the short term too. Cash covered puts sounds like an excellent way to hedge your bets. But if you've been following me for any period of time, you know it's all or nothing for me. That's all I have for you today. Be easy. Peace.